Well, the RBA board meets today. Its decision will be made public tomorrow on whether it will cut rates or not. The market says it will, but should it? Joining me now is EQ Economics Chief Economist Warren Hogan. Warren, what's the answer to that question? Should it?
No, it shouldn't. I think that the case for a rate cut's pretty weak at the moment. The question is, will they? And the bottom line there is we're just going to have to wait. That is a big judgment call. It would be based on the idea that there is such a strong view in our community that rates should come down with an election looming, that the RBA just wants to sort of duck away from any sort of spotlight. And it'd be almost an act of appeasement, I suppose, because really the only reason that any of the economists are putting forward for a rate cut is that inflation came in slightly better than expected last time. But we know those numbers are not great because of subsidies, and we know that the economy is picking up. So I think the case is weak, but you never know. We'll wait and see.
Yeah, I mean, this is really interesting because the RBA is independent of government. It should be above politics. But all the indications are at the moment that it's not. It is still independent, but it is not impervious to the media frenzy, but also the political pressure in an election year.
Yeah, and look, I'm not overly convinced that the board will be worried about any political pressure coming directly out of Canberra. I think their main political concern is their standing in the community, which of course our leadership, our government has a role to support that through explaining their decisions rather than trying to blame them for problems and making mistakes. But their concern will be that their standing, which has been weakened by that poor forward guidance in the pandemic about not raising rates till 2024, will only be further damaged by this need to hold rates higher for longer, because they never actually raised rates as high as what they probably would have in the past or what other countries have done. They've actually tried to do this narrow path, but they're not getting a lot of credit for it because people don't know the counterfactual. So yeah, it's a tricky one for them. My sense is that they'll hold the line, that they'll wear the flak for the short term, knowing that the economic situation is such that it's improving and inflation is not behind us, and it's inflation that the community expects them to get rid of. That's their job.
Often these things come in twos or threes, but this time economists are saying it's going to be different. Do you agree with that? It'll probably be a one and done for a while?
Yeah, completely. If they do go tomorrow, I think there'll be a very cautious guidance from the governor in her press conference as well as in the policy statement. And I think the reality of it is that there's a very good chance that it'll be a one-off, and then it's really up anyone's guess what the next move will be, and it could easily be a hike later in the year or next year. So obviously the worst case for them is to cut, and then the economic information and the way the economy plays out points to the fact that that was the wrong move. But there's absolutely nothing going on in our economy that suggests a series of rate cuts is in order, because rate cuts are driven typically by weakness in the economy. And we're just not seeing that. We've seen a rebound in retail sales. Employment growth is strong. Unemployment's heading lower. And of course, importantly, we're starting to see some improvement in the housing market in the last few weeks. And that's already very unaffordable. So
yeah, but a rate cut. I mean, you can already see all the real estate agents foreshadowing this rate cut, trying to get some interested buyers in the market. I mean, that is going to have a massive effect on the housing market, isn't it?
Look, I think a single rate cut probably will have a modest effect. It'll technically allow more borrowing. It'll have a boost to sentiment in this critical sort of selling period that we've got right now and into Easter. But it's a series of rate cuts that would really risk driving the market to levels that take it to even more unaffordable, and more unaffordable point. But I don't see them doing that. I mean, the case to cut a series of times has to be based on a forecast. The economy is about to fall off a cliff. And there is just no evidence for that. Yes, we can fear Trump and his trade wars. Yes, we can fear anything we want. But the economic data is telling us the economy is doing exceptionally well with strong employment growth and low unemployment. And the reality is that there just isn't a series of rate cuts to be had.
Probably a good time to remind our viewers that real estate agents with an Instagram account are not economists. So Just leave that one lingering there for a moment. Warren, just before I let you go, you mentioned, the inflation data coming in a little bit better than expected. But in that intervening time, no, we haven't heard from the RBA, but we have seen data out of the United States, which would show that inflation, at least in the United States, is not coming down or might be on the up again. And we've got Trump with this trade war. Surely that would be part of the discussion around the RBA board meeting today.
Oh, most certainly. And this is one of the new innovations where they have 2-day board meetings, which is great because they get to have a real discussion. They get the experts from the RBA to give them a briefing, and then they can really pull it all apart as board members and decision makers. And these are critical issues. And the US is a key issue in the sense that inflation has stopped falling. They've stopped cutting rates. The central bank governor there, or the chair, Jerome Powell, is telling them that we're not going to cut rates anymore. And inflation looks like it might even be picking up. That's the disaster scenario that the RBA can't afford. If they cut and then inflation starts rising, that's when their credibility with the Australian community and the broader global financial markets really gets damaged. So yes, these things will all be discussed. And the Trump issue, the trade wars, that's the source of uncertainty that we don't know how will play out. And of course, that adds to the need to be cautious and maybe just sit tight for a little bit longer.
It doesn't sound like that is going to happen though. Warren, great to talk to you as always.
Thanks, Laura.